Hello everyone, welcome to the trade breakdown on EU. I'm going to start off this breakdown on the daily time frame, right? So right here on the daily, you can see that I've been expecting a retracement since this range high right here was taken. And if you watched my last few breakdowns on EU, then you'd remember that as soon as this range high was taken, I started expecting a retracement profile. And now right here, you can see that we retraced back to this order block right here. Now it doesn't matter if the drawn liquidity is higher or lower, this order block right here on the higher time frame or any other key level on the higher time frame is going to give us a reaction on the lower time frame, which we can potentially expect on the intraday charts, right? Now, if the higher time frame key level is in the direction of the higher time frame drawn liquidity, then it would be a lot better. But even if the key level, right, such as the order block or the FEG is in the counter direction of the higher time frame drawn liquidity, then still it's going to offer a small reaction on the lower time frame. Now the scale of that reaction will be different for each level and will depend upon the quality of that key level, right? And I'm going to show you how you can determine the quality of a key level, right? We're going to discuss that in a minute. But you need to remember that every single higher time frame key level will offer a small reaction on the lower time frame, right? Now it doesn't mean that you're going to go and trade every single higher time frame key level. That's not how it works, right? But what you need to remember is that you're gonna get a reaction off of it, right? Now for some key levels on the lower time frame, when they touch a higher time frame key level, it will offer a huge reversal, right? Or which will look like an expansion on the higher time frame. But for other key levels, for key levels that are in the counter direction of the higher time frame drawn liquidity, they'll only offer a small reaction like a retracement on the lower time frame, right? Now for most of you, for beginners and intermediate student, it's best for you if you just stick to those key levels which are in the direction of the higher time frame drawn liquidity, and you should ignore the other ones, right? Because trading those sort of key levels on the higher time frames requires more intuition, more experience, and more technical knowledge. Now as we move on to the next levels of CPI, we're going to learn how we can trade those key levels as well. But for now, you should just stick to those higher time frame key levels which are in the direction of the higher time frame drawn liquidity. Now in the daily right here, you can see that we retrace back to this order block, and we know that our drawn liquidity is still higher, which is this range high right here. So we expected a retracement, and now we can expect this retracement to either end here, or we can go a bit lower again and then maybe expand higher towards this drawn liquidity, which is this range high up above, right? Now, right here you can see that with this retracement, we tested this order block's highs on Monday, which offered a reaction on the lower time frame and formed an expansion swing on the 4-hour. Then what happened is that today on Thursday, again we tested this order block's high and it offered us a reaction. Now, based on that factor, we know that this key level on the higher time frame in the form of this order block can potentially offer us a reaction on the lower time frame. But now we have to figure out and measure how far that reaction is going to be, how far that reaction is going to be. Meaning we have to basically determine our drawn liquidity and basically a level where we can potentially face opposing momentum or opposing key levels which can potentially drop price in the opposite direction, right? Which basically mean we have to determine our drawn liquidity, right, for the day or for the week. And the basic solution for that is to expect price to take out at least the previous day's high or previous day low. And in this case, we've got this Wednesday candle right here, and we can expect price to react off of this order block and take out at least the Wednesday's candle high, and that is going to be our drawn liquidity, right? That is a basic criteria that you can add to your system. That's how you can determine your drawn liquidity on a short-term basis for your intraday trades, right? That's how you do it. Now also right here you can see that this order block also aligns with another two higher time frame key levels, right? Which is why I expected it to be held upon and expected price to react off of it. One key level that it aligns with right here is this breaker block, and the other one is the weekly opening gap right here. Both of these key levels align with this order block. So on the daily, right? So on the daily, we've determined our drawn liquidity for the day, which is the previous days or the previous candles high, right? Now let's go down to the 4-hour and refine the thought process and analysis even more and see what we've got there. So right here on the 4 hour, first of all, I'm going to plot out the opening and closing time for the week. So we can see where we are inside the weekly range and how his price played out the past 3 days. So right here you can see that we started out with a range, right? As soon as the week opened, we started out with a range, and then we had an expansion lower during the whole of Tuesday and half of Wednesday, right? Now what happened on Wednesday is that I expected a retracement off of this daily order block and this refined order block right here on the 4 hour, this refined order block, right? What happened is that price tested this refined 4 hour order block and the daily one, and then it reacted off of it and had this reaction and formed this expansion swing on the 4 hour. Now the two factors that led to this expansion swings are that first of all we had an expansion profile, and we know that according to market profiles, after an expansion profile we always have a retracement or a potential reversal, right? And the second factor is that we merged it with a higher time frame key level in the form of this order block. So these factors combined with each other led to the idea that Wednesday is going to have a potential retracement or a potential reversal. So on Wednesday we tested an order block, right, and had this expansion swing, and now on Thursday we can again expect a reaction off of this order block, and maybe we could form an expansion swing higher based on this higher time frame thought process, right? But we know that we cannot expect price to make an expansion straight away, right? First of all, it has to test a higher time frame key level, and then it can make an expansion higher. And the key level here that catalyzed this expansion here was this rejection block on the 4 hour on Thursday, right? This rejection block led to this expansion right here, which I was expecting. Now some people might have been looking for this Wednesday's low right here to be taken as a CRT, and maybe then they could look for an expansion. But as you know, I expected this low to be protected and not to be taken. And the reason for that is simple. You know that when this candle tested a higher time frame significant and important key level already, right? And that key level aligned with multiple other key levels, right? So that was a high quality key level. And along with that, you can see that on the 4 hour we had this CSD in the form of this candle closing above the candle that filled liquidity, which is this candle right here, right? This candle right here tested a key level, meaning it filled liquidity, and then price had this CSD when the next candle closed above it, right? Which mean there was a change in the state of delivery. What you can also see right here is that during yesterday's London close, price reacted to this candle right here and expanded lower for the rest of the day. And then when Thursday candle opened, it formed this small range on the lower time frame. Now if you tell me that whether did I expected this to happen, then the answer would be no, because I literally had no idea what price is going to do after London close in the rest of the day, right? And I didn't even had to expect anything as such, because my job is following my plan and my plan at the right time, and that's it, right? I don't have to do anything else, and whatever happens outside my trading times and my trading session and my trading system, I don't care about that price action. I would just look at it in the next session price action, and I would look at the market and see what is it telling me and what is it showing me at the moment, right? That's what I have to do. I don't have to expect or anticipate anything outside my trading times. So right here you can see that when Thursday's candle opened right here, we formed this range just above the low of this CRT. Now as I told you before, on Wednesday I didn't know if this was going to be a CRT or not, and I could only see it today on Thursday after all of this price action has already formed. So when I saw that price formed this CRT and it reacted to it, I knew that based on the fractals of CRT, our drawn liquidity is first of all this CRT low, and this CRT low also aligns with this rejection block. So when price takes out this CRT, we can have a potential reaction from here towards the upside, and that's what I expected on the first half of Thursday based on what I saw. I only saw this CRT in hindsight during London's open on Thursday, and I couldn't expect it on during Tuesday because I didn't have to, right? I had already taken my entry on Wednesday and I was done for the day, so I didn't have to do or expect anything. But my job was to just stay out and then come again during Thursday and analyze the previous price action and see what is price telling me, right? I don't have to force anything, right? and I have to now expect on Thursday what can it potentially do. That's my job, isn't it, right? Now another thing right here is that if we plot the daily order blocks high right here, we can see that price also tested that order blocks open along with taking out this CRT low in this rejection block, right? Which led to price having this reaction, which offered me a long trade. Now obviously, I couldn't have taken an entry straight away, right? I first of all had to position myself in a CRT on the 4 hour towards the higher time frame down liquidity, which is the Wednesday's candle high or the previous daily candle high. And that's exactly what I did here. I waited for this CRT low to be taken and for price to test the rejection block, and then as soon as that happened, I went down to the 15-minute and I waited for my model 1 entry. These were the different factors that led me to expect this low to be protected and not to be taken, right? Now let's move on to the 15-minute and see how I took my entry there. So on the 15-minute, I'm going to first of all plot out the opening and closing times for Thursday right here, right? So that we can actually see where we are in the daily range. Now you can see that we straight away started with this ranging profile right here. And then price had this manipulation profile down to this CRT low. And with this manipulation profile, we tested a key level and also took out a higher time frame CRT. Now based on market profiles, we know that when price tests a higher time frame key level with a manipulation profile, the next profile we can expect is an expansion higher in the opposite direction, which is what happened here. Now the way how you can know that this manipulation profile has now ended and now you can expect an expansion in the opposite direction is by waiting for a CSD. And right here, you can see right here that we had a CSD and price closed above this candle and formed this order block, which gave me confirmation that now the manipulation profile has ended and now I can take my entry here. My stop loss was below the order block's low and I targeted the opposing 50% of the CRT and eventually the opposing end of the range is my drawn liquidity.